please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome. You've joined us on Business Lunch. I'm Nisha Podar and with me is Sonia Shenoy. Sonia, good afternoon. Markets off the low point of the day, but still marginally in the red at this particular moment. So Nifty 50 as well as Sensex, both in the red. Mid-caps are doing better than the other indices, other frontline indices. And Bank Nifty, that's also in the green. So some relief coming in by way of some relief in the rupee front also for the banking stocks. So that's doing well. And Reliance, the big boy, has also bounced back today. As far as the advanced decline is concerned, that is neck and neck at the moment.
Yes, it is. And, we're seeing a pickup in the mid-cap space, Anisha. So after many days, a lot of these favored stocks are seeing buying. Page Industries, for example, is up more than 5% at the moment. And you are seeing a whole host of others like Biocon, Escorts, etc. picking up pace. And what's common between, what's the common theme here? All of these are stocks that have given you great returns in the past. And once again, there's buying interest at lower levels in this space. A quick check on the rupee as well. We've seen some amount of recovery. At least there's no incremental selling on the rupee this afternoon. So 72.31 is where the rupee is at. It had almost hit that 72.50 level in trade yesterday. So some amount of respite is what we're looking at. But on that note, let's get in some views. Jahangir Aziz of JP Morgan spoke to us this morning. He said that until the fundamentals don't improve, the rupee will continue to weaken. And more importantly, he said that at this point in time, the RBI should hike rates ahead of the October policy. So he is expecting an inter-policy rate hike to come in. Listen.
I think the rupee, depreciation is a reflection of fundamentals. And till those fundamentals are addressed, I don't think thinking in terms where the rupee has cheapened sufficiently for people to start looking at rupee and positively. I think that requires the fundamentals to be actually turning around, and I don't think that has happened. In terms of interest rate positioning, I know that the RBI has raised rates twice already in the last few months, but waiting for October, that's about 3 weeks away. When the world is changing so rapidly, 3 weeks can be a lifetime. I would have thought that by now the RBI would have shown sufficient urgency to start raising rates now.
All right, so that was all about rupee 72.31 levels, round about that. It had touched a record low yesterday, closer to 72.67 to a dollar, and had even closed at the lowest point ever. So that's rupee. Slight recovery from yesterday, but still uncomfortable levels there. But some respite coming in for overall markets because of this. Let's shift focus to IL and FS Group stocks, and they are in focus today after, remember, ICRA revises its long-term rating for those companies, and Lata joins us with all the details and its impact on the banks that have exposure to this group. Tell us, Lata.
We must know the gravity of the downgrade, which came actually yesterday, and today a further set of subsidiaries, their solar power subsidiary and other subsidiaries are also downgraded. It's a downgrading 7 notches lower. So it's, as late as August it was AAA, and now goes 7 notches down to BB, which is actually, not 7, okay, 11 notches down to BB, which is actually junk status. So that would be equivalent to NPA. Now, what Nomura says is that they have gone through the entire exposure. It is a 90,000 crore exposure to the banking, in all, of which 57,000 crore is to the banking system, and the remaining are short-term, that is debentures, CPs, etc. So that about 1/3 is in the form of CPs, etc., would be around 30,000 crores, and another 57,000 crores to banks. What they find is most of the private sector banks have very little exposure, amounting to Axis 0.25% of Axis's book. So that's not all that small. And then you have 0.1 to 0.15% of Yes Bank's loans. So it's not 0.15% of the total 90,000 crore, but 0.15% of Yes's book is exposed to this. SBI of the public sector banks has a very small exposure, considering that it's actually one of the shareholders of IL&FS. Higher exposure is for PNB, BOB and Union Bank. Now, Nomura adds that they have not been able to research the entire 57,000 crore. They've gone through the Ministry of Corporate Affairs, that is basically the ROC, and they have found out exposures for 36,000 crore of the loan, not for the entire 57,000 crore. So of that 36,000 crore, what they find is private sector banks access 0.25% of their own book, and yes, 0.1 to 0.15% of its own book. The exposure for PNB, BOB and Union works out to about 1% of their own FY18 loan book. Actually not 1%, 0.5% to 1% of their own book. So that could be substantial for PNB, BOB and Union. SBI's exposure is low, and maybe much of it is already NPA in SBI's books, but for the rest of the banking sector it could be standard. So there is this another big load coming. If it is not resolved, then there is more recognition coming.
If you're looking for pockets to trade, mid-cap IT is the space to be in this afternoon. All your mid-cap IT stocks, Hexaware is up 2.5%. Mindtree, in fact, has hit a new high today, and that stock has almost doubled since the start of the year. We've had brokerages like Macquarie upgrade a lot of these names, so things are looking pretty good here. But let's get you a CNBC TV18 exclusive now. Sources tell us that the insurance regulator is in consultations with SEBI to review the IPO rules for insurance companies, and this will work in favor of the insurance company. A lot of the listed stocks are doing pretty well. Yash Jain joins in to give us all the details. Yash, over to you.
Well, absolutely. The insurance regulator has reached out to SEBI suggesting certain changes and amendments with respect to IPO regulations for insurance companies. To start with the first one, and this is with respect to diversifying and broad-basing the shareholding reservation pattern for the insurance IPOs. Here, essentially to reduce the concentration of risk and broad-base the shareholding reservation pattern, IRDA is likely to have suggested to reduce the QIB portion in any insurance IPO from the current point of 50%, and essentially then later on that reduced portion out of the QIB section should be distributed amongst the various other shareholding categories, be it retail, be it HNI, so on and so forth. The second and the most important point is with respect to the minimum public shareholding norms. Of course, we know that all the listed companies are essentially mandated to dilute 25% of equity in public within 3 years of listing. IRDA here has said that it's not likely and it's not ideal for any insurance company to transfer 25% of the risk in public within that short period of 3 years. Hence, a time extension should be given to the insurance companies as far as that particular dilution of 25% is concerned. If not a time extension, then the quantum of 25% should be reduced. If this particular point materializes in terms of any regulation, and if it is retrospective, then it will benefit a lot of these listed insurance companies, be it ICICI Prudential Life, be it GICRE, be it New India Assurance, as well as SBI Life and HDFC Life, as all these companies have a significant quantum which they are yet to dilute into the market to comply with that 25% public shareholding norm. The third one is with respect to raising debt via Tier 2 bonds. Right now, insurance companies are only allowed to raise up to 25% of their net worth via Tier 2 bonds. IRDA here has suggested to raise this particular limit, possibly take it to 40 to 45% of any insurance company's net worth.
Okay, thanks a lot for that, Yash. So that's an exclusive coming in, but let's hear out what the IRDA chairman had to say on the review of rules for insurance companies.
I have not yet come to any conclusion and all, so right now it is premature to...
But are they being discussed right now?
Right now there is nothing, but when there is something, then we will tell you. A request has been made today in our discussion. My response is that these would be eminently possible when we go for risk-based capital.
Okay.
So in banking sector that has happened.
Exactly.
So similar thing would happen here once we move over to risk-based capital.
All right, so that was about the changing rules for an IPO in the insurance sector. Remember, we saw a spate of insurance IPOs and many more are in the pipeline. Let's shift focus to the power sector and especially Tata Power, which is up in trade today over 3.5%. And the management of Tata Power confirms to CNBC TV18 that the bid for Prayagraj Power remains valid but will require consent from 90% of the lenders. Now, earlier today, we spoke to the management, Praveer Sinha, the MD and CEO of the company, on the plans for bidding for debt-laden power assets. Hear out this exclusive conversation.
Resurgent has very many filters for taking any project. It looks at projects who have the latest state-of-the-art equipments, especially supercritical plants are the ones that it is looking at. It also looks at plants which have very, very attractive tariff. That means it should have a coal mine linked to it, or it has a linkage from Coal India. It should also have a PPA, a long-term PPA. Normally, the debt equity for all power plants is 70-30. So that's the type of numbers that we look at. For Tata Power, of course, we are going through huge amount of consolidation. We are deleveraging our balance sheet. And we are also focusing in terms of the new business opportunities in renewable and value-added services. So there is a huge push now that we are giving.
Okay, well, let's move on. The technology stocks, as I've been telling you, have been the big movers lately. The rupee has weakened to all-time lows yesterday. However, the depreciating currency can be a boon for domestic IT companies. Earlier, we spoke with Manoj Bhatt, the CFO of Tech Mahindra, to get a deeper analysis. He did indicate to us that 75% of their exposure is hedged, because of which they won't see any impact on the bottom line because of the depreciation in the rupee. Margins, yes, margins will see a bit of a fillip. Let's listen in.
We have hedged most of our, about 75% of our next exposure for the next 12 months is hedged already. And I think it's hedged at around 71.5 or so on an average to the dollar. So what we will see is that last year we had a large amount of hedge gains, which will not be there this year and the next 12 months. But effectively, the EBITDA will go up. So at a net level, I think there won't be much of an impact.
All right, let's take it straight to the retail sector. And Ravi Jaipuria, the man behind RJ Corp. Remember, RJ Corp is the promoter of Varun Beverages. And that promoter, one of PepsiCo's largest bottlers in India, seems to be betting big on India's retail story. In fact, CNBC TV18 learns that the company's retail venture, J-Mart, is now expanding to larger format convenience stores in a bid to take on the likes of Future Group's Easy Day and also Reliance Fresh. Priya Sheth, our colleague, has the exclusive details on that. Priya, take us through their expansion blueprint.
Well, absolutely. Everybody seems to be wanting a part or a pie of India's retail story. In fact, what we do understand is that Ravi Jaipuria is embarking on a big retail push. In fact, do remember that the company runs J-Mart, which is a set of convenience stores in housing societies. About 64 odd stores is what the company has at this point in time. And what we do understand from our sources is now J-Mart is looking at expansion to larger format stores. So these stores will be in the range of 4,500 to 5,000 square foot stores, which is equated to the likes of Reliance Fresh or Future Group's Easy Day. So essentially what the company is planning to do is open these 5 large format stores to begin with in the Delhi NCR region over the next 3 to 6 months. And these stores, the first of the 5 stores, will be opening in September end. It will have about 5,000 SKUs across different categories. And they also will have an in-house cafeteria called Grub. So, you know, this is a space that we will continue to watch. Of course, as far as revenues are concerned, the company is looking at about 100 crores of revenues through J-Mart at the end of financial year 2019. And that's a space that we will track. Essentially, lots of global players have also expressed their need to get into the Indian retail story. So we will keep a track of that. In fact, we did write to J-Mart on the same. The company has confirmed plans to expand to high street residential stores.
A statement coming in from Mehul Choksi there. Let's shift focus to Dredging Corp. That is the stock on our radar. Gains in trade as sources tell Network 18 that the government is looking to sell its stake. And Lakshman Roy, our colleague from CNBC Awaaz, joins in with exclusive details on that. Tell us, Lakshman.
जो मुझे सोर्सेज से जानकारी मिली है उसके मुताबिक ड्रेजिंग कॉरपोरेशन ऑफ इंडिया में सरकार अपनी पूरी हिस्सेदारी बेच देगी और इसमें नया डेवलपमेंट ये है कि अब हिस्सेदारी बेचने के लिए दूसरी या फिर निजी कंपनियों को नहीं बुलाया जाएगा, बल्कि पोर्ट सेक्टर से जुड़ी हुई 3 कंपनियां हैं, उनकी पहचान की गई है। यही तीनों कंपनी ड्रेजिंग कॉरपोरेशन ऑफ इंडिया में सरकार की पूरी हिस्सेदारी मिल करके खरीदेंगी। इसमें 3 कंपनियां हैं, विशाखापट्टनम पोर्ट ट्रस्ट, पारादीप पोर्ट ट्रस्ट और न्यू मैंगलोर पोर्ट ट्रस्ट, और तीनों कंपनियां कंसोर्शियम के तौर पर हिस्सेदारी खरीदेगी। और इसमें विशाखापट्टनम पोर्ट ट्रस्ट जो है लीड कंसोर्शियम की भूमिका निभाएगा, यानी विशाखापट्टनम पोर्ट ट्रस्ट सबसे ज़्यादा हिस्सेदारी खरीदेगा। जो प्रस्ताव तैयार किया गया है उसके मुताबिक ये ब्लॉक डील के जरिए तीनों कंपनियां सरकारी हिस्सेदारी खरीदेंगी और इसको शिपिंग मंत्रालय ने प्रस्ताव रखा था और शिपिंग मंत्रालय के प्रस्ताव को इंटर मिनिस्ट्रियल ग्रुप ने मंजूरी दे दी है और किसी भी वक्त इसे कैबिनेट से मंजूरी मिल सकती है। और इस प्रस्ताव के पीछे जो लॉजिक है वो लॉजिक ये है कि पोर्ट सेक्टर की कंपनियां अगर ड्रेजिंग कॉर्पोरेशन में हिस्सेदारी लेती है तो बेहतर तालमेल होगा। और दूसरी बात कि सरकार शिपिंग सेक्टर में कई सारी नई योजनाएं ला रही हैं, वाटरवेज बना रही हैं, नए पोर्ट बना रही है, नए टर्मिनल बना रही है, तो फिर ऐसे में ड्रेजिंग कॉर्पोरेशन को ज़्यादा कारोबार मिलेगा।
All right, Lakshman ji, thank you so much for joining us. That's dredging up about 9% It's been one of the big movers since the start of trade on the back of this news flow. Let's take a short break on that note. Up next, Raghuram Rajan talks about the rupee free fall.
And take a look at the markets. A quick check on that. Sensex Nifty have gone deeper in terms of the losses in the last few minutes of trade, but still marginally right now in the red. Mid caps are trending better than the frontline indices. It's the bank Nifty which is still holding on in the green but has lost some points. But Lupin as well as Cipla, these are the 2 counters from the pharma space which have really spiked up in the last few minutes of trade, so worth keeping on our radar at this point. Take a look at Cipla as well apart from Lupin. So apart from the mid-cap IT space, the pharma space is also looking buoyant. Also rupee depreciation really helps these 2 counters, these 2 pockets. Hindalco, a sudden fall, so keep that on your radar as well. Now let's take it through a very important opinion coming in on CNBC TV18. In fact, our colleague Lata Venkatesh spoke to the former RBI Governor Raghuram Rajan, and he says that the developed economies are not decoupled from the emerging economies, and adds that growth is in EMs, and if tariff was low, these nations, then DMs will also suffer. But no such realization has really hit the United States of America yet.
The reality is much of world growth now is driven by the emerging markets. So the industrial world cannot be decoupled from growth in the emerging markets. We need both to grow if the industrial countries are to do well. We have an illusion, a temporary illusion, that the industrial countries are growing and growing strongly, and it doesn't depend on the growth in emerging markets. That's an illusion that will crack if, in fact, the emerging markets slow considerably. I think the Argentinian and Turkish case are special. They have had a history of problems, and this has come to the fore recently. It does signify some concern for other emerging markets. This is not a good time to abandon macro stability. You have to focus on reassuring markets that you are good for it. And unfortunately, countries that have growing current account deficits, that have large fiscal deficits, look particularly vulnerable at these times. You also have a large fiscal deficit. Of course, the center has been relatively moderating, but the states have increased their fiscal deficit, and when you aggregate government fiscal deficit, it is quite large. I think the fact that India is growing quite strongly gives it some positive. But in general, I think we have to pay attention. Now, the current account deficit is partly a result of oil prices going up, but it's also partly a result of our export sector having been hit by the twin shocks of demonetization as well as the GST.